Hi, everyone. Welcome to episode one of this series of lives that will happen every Friday at 12 p.m. Eastern Standard Time. In these lives, I will talk about strategies to help you, real estate investors. So, let me introduce myself. My name is Adam Levine. I am a private lender. I've been private lending for over a decade. I was a partner in another lending company. I'm out of that partnership. We started that back in 2018, and we did very well. Uh, Levine Capital was focused mostly on uh, private lending. That's how I got my roots over a decade ago. We did invest in some other ventures, but now we're just strictly focused on private lending at the moment. And we are going to talk about a lot of stuff, how how I seen this industry evolve throughout my time in this arena. I saw when I started over a decade ago, there wasn't any institutional capital. Now there's a plethora of that capital available that really brought down rates. Brought down it became a interest rate competitive environment. When I started out, we were lending at 4 points and 14%, lower leverage loans. Institutional capital flooded the market, really compressing rates, and the, it basically offered better economics to you borrowers. Now, I'm starting to see a lot of things from my experience where a lot of investors, they need money for down payments. Also, they call it gap funding. They may need money to cover interest payments where maybe you have multiple projects going on, and you and cash flow may be something that you need help with. Also, I see another niche, investors. You know, let's say you're an investor and you're looking to flip a house. You just put down maybe 10, 20% down to get the bridge loan or the fix and flip loan, and you need money to start the project. We have a solution for that as well, where we could offer you more money to start the project, and that would be your construction monies, right? Or let's say you come to me later down the road and you're like, Adam, hey, you know what? I'm a little short, or I want to take down another project. Can you help me out? And I've done it before in the past for someone. Make a long story short, the guy, a client of ours, he needed $70,000, and he told me he did $70,000 worth of work. I got the report back and only did 50% of that. I helped him out and gave him everything. He gave me a nice, compelling story, and I helped him out. So keep in mind, like, we're very relationship based, and these programs are not for everybody. These are usually for repeat clients or clients that have we do make exceptions for new business, but typically it's for repeat clients. And we so another so these micro those are basically our micro loans we're doing. We're still evolving things. So if you take a look at our website, let me show you real quick. So what's really cool is we're still. Let me see if I can share my screen. Give me a second. Share screen. All right, here we go. So we're still working on our website. We're fine tuning things, but it's pretty robust so far. Basically, what I mean is, for example, another thing is we have automated proof of funds right here. You could always so anyway, so over here, let me go back. So over here, these are all our programs, and we're constantly evolving and going back to like niches of stuff. So let's talk about fix and flip, right? How many people do we have on here right now? Because I know I'm going live, and want to make sure that I'm not missing people's questions right now. Let me see. Okay, so the type of loans we focus on are we do a lot of fix and flip, meaning that name is interchangeable. It could be a bridge loan, could be a fix and flip. And just to go back to, I forgot to mention, we deal with like different buckets of capital. So we work with our own capital. We work with institutional capital. We also have other investors that may come in on loans with us. So basically we're very diversified in capital sources, and a lot of this proprietary stuff that we're doing, like these micro loans, transactional funding, gap funding, gator loans, whatever you want to call it, is our own monies. Um, we did bring a few other outside investors to gap fund some other people's loans, but generally, yeah. So let me go back to this fix and flip, right? So as you can see here, fix and flip, these are generally short-term loans. They're 12 months, could go up to 18 months. Let's say it's a standard loan, right? It's institutional capital, which is great because the money's cheaper. We close the loan, we sell it to an aggregator, um, and but institutional capital is always going to be cheaper than our private capital, okay, or any other private investor. Okay, so now let's go back to this. So this fixed loan is a 12-month loan or 18 months. We could fund up to 90% of the purchase price, assuming it's a standard, no gap funding. We could give you 100% of the construction monies up to, let's say, 70% of the after repair value. We could go to 75% and possibly up to 92% on the purchase, or 92% loan to cost. But generally, for standards, to keep it safe, we go up to 90% loan to cost. We'll give you 90% of the purchase monies for the initial release. You put down 10%. We'll give you 100% construction up to 70% of the ARV. Again, there are exceptions. We could possibly go to 75, and we could possibly increase your initial release to 92%. Okay. Now, a lot of times what we'll do is we'll make let's say 2 loans, right? So we'll give you one loan, assuming that you're 90% of the purchase price. In order to qualify for 90% of the purchase price or 10% down, you need to have at least 6 similar flips, 6 deals that you completed. It could be a flip, or so you bought, you renovated, and you sold, or you bought, renovated, refinanced, or you bought, renovated, just held it. Maybe you bought it all cash. It doesn't matter. And look to have similar renovation budgets. I have a lot of people that come to me like, oh yeah, I've done 20 deals, and then I give them a term sheet. Oh, but out of those 20 deals, I was just a contractor doing work for other people. The problem is you're not on the HUD, so you can't. So if you can't show that you're an owner of that deal that you're involved with, it doesn't count. But I'll have a another series on that. But going back, so to qualify, it's, let's say, 6 similar flips. And what we're doing that's very innovative is we could provide on this, for example, we say up to 100% LTC. We actually have clients, we go over 100%. I think we give them over 107%. I don't have all the exact numbers, and I can always run a case study later. But keep in mind, this is a deal we've done, like multiple deals with this client. He put zero money out of pocket, and he's happy because we could close fast. We're reliable. He knows our money's more expensive for the 100% financing, no money out of pocket, but also he knows that we're reliable. And the reason why he qualifies for this program is because, number one, I've known him for years. He's a good guy. He's a realtor. He does a lot of transactions. He's also a flipper as well. And he's also he got me involved with and other stuff. He's a great resource, but also he finds really, really great deals in New Jersey that are in high demand areas, low supply, more, let's say, for catering to the masses and affordability. For example, he'll fund the deal, let's say, in Barnegat, New Jersey. Maybe has like a 50,000 renovation budget, very, very light reno. Maybe he put 50 on there, but it's actually less. And basically, the resale value, let's say, is in the 400 range. So there's a lot of buyers that are looking for the 400 range, and he'll close on it, right? And he'll already have buyers lined up because it's in such high demand. So basically, he'll pay me back in a month or a few months. And so to me, I like those deals because the gap funding, we used to do gap funding 12 months. Could we? Yes, but there's got to be a compensating factor. Maybe we're making such a high yield that it's worth staying 12 months. But generally, our gap funding, and there's a reason why this is happening, because I'm learning a lot about what other investors or gap funders are charging. But typically, gap funding, we want to be around 6 months, and we generally want to make on that gap funding. From what other investors, what I'm hearing, they want to make at least 20 to 30% return on that money, but it's reliable. And I could go down that road later, but going back to the type of funding, so we could fund that client we just rolled in everything. I even helped him out because let's say his appraisal came in lower. I actually worked with him to give him more money to cover the difference. But there was such a huge spread, it didn't matter. And what's interesting with his deal is that the appraisal came in lower, let's say 395, but it ended up selling for 450. So, and then he bought another property in the same market, and the same thing happened again. Appraisal came in lower, he resold it. So now I'm losing track how many deals we've done with him. So that's one option. Um, Other options are, for example, we're closing a loan this Friday. No, next week. It's supposed to be this Friday, but it didn't happen. It's another way of gap funding. Um, Basically, what we're doing is she the client she qualified for she came as a referral. I'm only doing this because I feel very comfortable with this client. If you look at credit analysis, the four C's: credit, collateral, capacity, and character. So I felt very comfortable with her character. I mean, basically, at a high level view, she didn't qualify for the 90-100 opportunity or financing. Why? Because the same thing of validating experience, and I could go through a whole nother way to really help. Actually, we're having a networking event, and we'll tell you about that later. We're going to be talking about this financing and how to qualify for the 90-100, or meaning 10% down, 100% construction. So what happened was she didn't qualify. Same example. She did a lot of deals under someone else's name. She owns rentals and whatnot, but she qualifies for the 85%. That could be a deal breaker for her. I mean, so to help her with, because she wants to leverage to take on more deals, and she wants to do about 10, 12 deals a year, right? So give me a second. So what happened was to help her out, I am giving her up to 97% loan to cost. I'm actually going to give her extra money. So her out of pocket was estimated, I got to look at the final HUD, is $60,000 out of pocket. With the gap funding, she's going to only put out $30,000. Keep in mind, her money's going to be cheaper than someone that's 100% financed, meaning no money out of pocket. So like we don't, so, and I could go over that later, but I just want to give you more a high level overview of what we're doing. Another thing we do is the money, so money up front, right? So what happens is construction monies, where we're basically going to give you more money at closing, right? So what happens is which is another common scenario that I see a need for, is we have clients or a lot of people that they need money to start the project. So we just gave them, let's say 90% of the financing for the purchase. Obviously, they had closing costs or whatnot, and now they need money to start the project. Okay, why? And they have their own money, but they want to stay liquid because they want to go buy another house. And these are professional investors. This is all they do full time. They may have another job, but majority of investors that are taking 10, 12 years a year, this is all they do. Okay, in my opinion. And the ones that I see successful, because I could go over something else. If you're diversified in W-2 and try to do this, it could be problematic. But anyways, and this is something that I'm experimenting with right now, and I don't mind taking on. I mean, this is a conversation we did. This is a conversation we need to have at the beginning if you want the money up front. But like I said, like we could discuss that later on in the project. But generally, like I need to feel comfortable with you. I mean, make sure you pay me on time. Certain things. Credit. I would like to see a decent credit score. If you have a low credit score, I mean, we could fund fix and flips as low as, let's say, we've done 600 or something. But actually we gave that guy a perk too, but it's a different reason why. But generally, I would say we want to see a good credit score for perks. We could, there's always got to be compensating factors. Maybe we take cross collateral, but okay. So let me go back. So this client, or future client that we're gonna want to work with on this stuff is that if you need money, maybe we'll give you. Let's say you have a budget. Maybe we'll give you 25% of that budget, as long as everything. Like I said, we go up to 100% LTC. Doesn't mean we're going to give you 100% LTC. We'll give you more upfront. And it's almost like a factoring loan where we'll give you that money, and then you're gonna pay us back that draw money upon resale. It's gonna cost you. Keep in mind, this stuff's gonna cost you more money. I'm not here to talk about how we're structured it, but generally, like I said, like other investors they want to make at least a 20 to 30% return on that money. Some even more. We're thinking the same thing, right? But we don't have a set box for this type of lending. It's all case by case, and we study it and we determine what we want to lend. We do, and then if you become a really good client of ours, we'll set like almost a standard where every time it's like, okay. And I have one client like that. He's just like, Adam, I got the deal, I got the appraisal ordered, it's in your name, and the drill. So I'm like, okay, let me size it up. Hey, the numbers look great, blah 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 blah. Boom, term sheet goes out. And we work with him, whatever it is. And he's so happy, and we're both happy because we're both making money, and he's very happy. Another thing that he's happy about too with this is we could do 24-hour draws, which is awesome, where you just go in there, take pictures, and then submit a draw request. And you submit a draw request. We'll send you like you take pictures, and then we reimburse you. Let's say we tell you 24 hours, but a lot of times it's the same day. It's amazing. So that helps with the velocity of money, so he can just keep the project going. So another thing is no interest payments. So we've done that with. We did that recently a few months ago on a deal right by my house and right by my mom's house in Monmouth Junction. New borrower. I felt comfortable. I mean, I felt good about the borrower. I felt good about the property. One of the decision making on that was it was a small deal. The resale was it's in the threes or high twos. I forget the exact. I gotta look at the economics of the deal again, but it's just sell quick, a condo, but what I did was she has no payments for 6 months, which she's very happy. And I also rolled in more closing costs into the loan as well. And I think we gave her over, I forget the loan to cost. It was definitely over 90%. Might have been, I forget. I got to look at it for a case study, but she's very happy. So for 6 months, she'll have no payments. Okay. And I also rolled in closing costs. So I forget the exact economics, but I mean, like her out of pocket, what it would have been for a standard verse with the no payments and closing costs, but she's happy about that. And we've done some other loans that we've done is, so if you look over here, so that's like the fix and flip. We also have other resources that people that offer, I mean, they don't offer, but they'll show you how to get an unsecured line of credit. And I could put you in contact. I could put you in contact with those resources. And also I have other investors that like the gap fund too. So if it isn't my money, at times I may just bring in other investors, which I've done in the past. And the reason why is because I have investors that are looking for yield. They trust my underwriting, and they know that they're going to be protected. If I provide the first loan, they're going to be protected because I'm monitoring the whole project. I see the draws coming in. They're going to take a second, but they know that they feel comfortable, and I'll make the rates a little bit cheaper. Rather, if I'm going to put my own money out, I'll make it's more expensive. It'll be a little bit more expensive because I'm bringing in that investor, but it's going to be cheaper if I put out my own money. Or, if you want to bring in your own investor, we also, I mean, I would say on the cheaper end for our fix and flip loans or even long-term rentals, but we keep our cost of capital lower, which enables us to be able to provide better economics to you, the borrower. That's the name of the game, And so a lot of times for these fix and flip loans, we'll give you two options. We'll say, hey, this is the standard. You may pay, let's say, 1.25%, maybe 1%. We start at 0.75, but obviously there's certain things that determine if you're going to get 1.75 or 2%. 2%, and really, if it's a small loan like $50,000, because we could go as low as 50,000 for just a standard fix and flip. We're gonna have to obviously charge a little more because we gotta keep the lights on, right? But I mean, we could always finagle numbers and with fees and stuff because our goal is we want to do more volume. So if we feel you're gonna be a high volume client, then it's worth to reduce fees, and we'll make it up. We'll make it up by the volume. Okay. And I mean, I'm giving you a high level view of these fix and flips. You're not paying interest on the money you don't use. If you do reserve, let's say if you do reserve the no payments for 6 months, we'll just you're gonna pay money for money that's not used because we make it a Dutch loan, but because we're gonna prepay your interest reserves basically for 6 months. But we'll go over that. Long-term rentals. I know the fix and flip. And if you have any questions, like I said, you could go here and hit book a call. That goes right to my calendar. And yeah, that's probably the best way. You could always email me at adam@levinecapital.com, or you could always text me. But a lot of times it's just easier just to book a call and you'll be able to talk to me. And I love talking to new investors all the time. Right here is really cool. This is our automated proof of funds, right? So what you're doing is you just put your information, boom. I think it's like a minute later, maybe I think it's less than that. You'll get a proof of funds. A lot of our clients, they love it, and it just streamlines everything. And let me go back. And get a loan. This is our quick application. It takes less than 5 minutes. So, and yeah, we run a lot of promos. Let me go back though to here. Okay, so long DSCR loans. I'll just keep it brief. Not really that. It's not really that innovative. But we're cheaper. The cool thing is I'm actually a lot of clients or myself going to get a mortgage, and it's really a pain in the butt. Tax returns up. It's just very, very, very time consuming. Give me a second. Let me shut this off. It's very time consuming and it's a lot. DSCR loans, there's no tax returns required. And yeah, that's so if you have a high DTI, you don't show a lot of income, which a lot of real estate investors, don't show a lot on paper, but they're because of all the tax benefits and write-offs. They'll go DSCR because it's focused on your credit and the cash flow of the property. Okay. And if you want to talk about DSCR, I'll go into that, but that's not really innovative. New construction, this is cool actually. We could go up to 90% loan to cost, and this is a really cool thing. We'll give you 85% of the initial release, and then we could roll in that extra 5%, where we could roll in your interest payments into the loan, bring you up to 90%. But that's not really as innovative as the other stuff. We could do portfolio loans. Now the fun stuff, the micro loans. So the micro loans, that is really cool stuff. And keep in mind, we'll take first and seconds. I'm still these loans. I'm a little slower to make decisions at this time. My goal was to eventually speed up the underwriting, and I'm hiring and training people. So please, just bear with me. Sometimes it's easier for me just to decline it because we have so many other good loans in our pipeline. Your loan may be a great loan, but it's just capacity. But now we're systemizing things. Things are really, we're really quick to give term sheets. We'll say like 24 hours for like standard loans, standard fix and flip, DSCR, new construction. And then we're starting to get really good at analyzing microloans. For example, we had a contractor that needed $50,000 on a house that was already on the market. Okay. And the credit was not good. Whereas they would never get a loan from a bank. And there's other things as well. The he had so this house was on the market. I think he needed the finishing touches over here, but he needed money to because he was equity rich, cash poor. So he bought two houses cash. He needed money to start another project. So I made that loan, that $50,000 loan. It was a 6-month loan, but I made it. There's another scenario where we had a client that was referred to me. He needed $50,000 as well, where actually I had a few clients. Oh, that's one. So we had a client. Actually, we're working on a refinance because he uh, he had a construction loan. He ran out of. I mean, he needed more money, so I gave him $50,000 to basically to have the project continue on. I took a second behind the other lender and pay. And right now, the loan took longer. I was supposed to be paid back in 6 months. Ended up taking longer, over a year. But we're working with them. And right now I'm working on actually giving them a cash out or a rate and term or cash out for a DSCR loan. So I can get back my 50,000. And he's a good client. And another loan, I actually gave him like 300,000. Same thing. It was transactional. It was only a 3-month loan. So there's actually a house in Philadelphia. Same thing happened. He had a lot of money tied up in this project. He's got to pay his crew and everything. So I gave him 300,000, and he refinanced and was able to pay me back the money. And that was so. This is, I mean, that's not really a micro loan, but it just gives you it's more trend it gives you an idea of what we could do. Another time, the guy needed money for earnest money deposit. He needed 50 grand. Seems like a common number. It was basically a multifamily property located West New York, I believe it was. And basically, he had an investor that was going to put up the earnest money, and that's kind of like his investor that's going to fund the whole deal, like the equity required, and then he has another lender providing the bridge loan. We could have actually provided that bridge loan, but it was just easier to just keep him with that lender because of the sensitivity of the closing. But I gave him $50,000. Actually, I did this while I was with my wife on our wedding anniversary in Costa Rica. It all happened around that same time. So yeah, we could fund deals internationally. But anyways, so he needed 50,000, and I felt comfortable with that loan because I was able to cross collateralize it with another property. And his exit was to pay me back when that other investor, basically he's just going to replace my money with the other investor's money, or when he sells another flip. So I felt good about it. That loan was only for a month. It was more transactional. So we could get very creative. I mean, generally, I signed up for a community, and basically what happened was I learned what investors are making, and they're making, I used to be cheap. I did one loan at 14% for a client. Same thing. She needed money to for a flip that she went over budget on. I cross collateralized it against another property. That was about a year ago. And it was at 14% annualized return. But now I'm structuring deals differently thanks to someone that I signed up for his mentorship. And I learned that other investors are making 20, 30% on their money and it's not annual. It's literally, they'll give you, like, if you put out 100 grand, you get back 120. Let's say it's 20% return and a max. So we like to make a high yield in, let's say, 6 months. That's my sweet spot. So if you're looking for a second lien loan on a property, I typically, like, for example, I'm working on a loan right now. Client came to me from a broker, and she has a $50,000 loan on a house, and she wants to pay back the other investor. So I'll give 50,000. But she needs, and the way to pay back the 50,000 that I'm going to give is through a DSCR loan, a cash out refinance. So I'm open to working on that loan because it'll probably be about 6 months. And basically, I feel comfortable because I'm gonna be doing the DSCR loan, and I'm gonna control the whole transaction. So keep in mind, like in the past, like I might in the past, I might take a second, and it really depends upon the deal. For example, that other client with the 300,000 to 50, he had like a local bank that did the cash out that provided the financing payback. But generally, I made that slot as an exception. The money was more expensive, but I could work with you if I'm going to get both loans. I'll provide the 50,000, and if I'm doing the takeout, to pay back my 50,000. Yeah, so this is like a lot of innovative stuff we're doing. Transactional lending, like earnest money deposit loans, and other scenarios like double closing. So, yeah, for example, an earnest money deposit loan. We have a lot of wholesalers that we work with. Let me get a glass of water. We have a lot of wholesalers that we work with, and cash flow, it could be an issue where possibly they'll need. This client had multiple earnest money deposit money out. He locked up multiple properties. He has high overhead because he's got to pay for software. He's got to pay for all his VAs, and maybe his burn rate was 15 grand a month. And because he asked me for 10,000, I'm like 10,000. I'm like, thinking, $10,000 lying around. I mean, and then I got it. It's just he's got payroll. He's got a lot of money out on the street. So I gave him 10 grand. The goal was to pay me back within 2 weeks. It ended up taking longer. I worked with him. And from that experience, I learned how to structure these deals better for the lender. But he has great character, and he paid me back most of the money, and then I got another payment coming, I believe, very soon. I got to check. It's actually coming back probably next week. I got to check. But I was able to work with him. I'm flexible, but also I'm very flexible because I know him. He has good character a lot, and we've done other deals together. But that's like a scenario. Let's say if you're a wholesaler and you want to, you need to put a property on the contract. We could give you that earnest money deposit. There's other client I told you about before, the $50,000 loan. He needed EMD money, 50 grand to buy a 6-unit building. He had money in the bank, but he didn't want to tie up 50 grand for a month. So I provide that money. And obviously, like, there's a lot more to how I structure the deal and due diligence and so many other things, but I'm just giving you a high level view. Double closings. We had multiple clients, wholesalers. We funded one recently in a property in Essex County. The client went to the auction and he won the bid. He got awarded the deal. And basically he has a real estate license. And in order to you can't wholesale properties if you're licensed. So you have to take title of the property. So that was the solution, that instead of just signing the contract, we gave him the money so he could close. And then a few days later, usually these double closings are the same day. This one was actually not, because you have a lot of transactional lenders that fund double closings for clients, but they want they want to make sure certain things are happening. Basically, we were more flexible with this client, and it cost him a little bit more money for the flexibility, but he was very happy because he had such a huge spread of the deal where he actually broke me off even more money. I didn't even ask for it because we were just so like this very smooth. He needed the money. It was reliable. Another double closing we did was actually not double closing. It was actually more of a transactional loan. So that scenario I just mentioned is not really double closing. It was more transactional because the way I got paid back was through a purchase, but they had to get so C's money was an escrow with it was more transactional. So let me go back to another scenario. I'll give you another one right now. Client was working on a short sale, and he needed $280 something thousand. He called me that day. He needed the money that day, and I funded it that day. He was so happy because his other lender backed out of the deal, and C's money was not in escrow. Okay, so a lot of lenders they don't really feel comfortable with this. I felt comfortable because I liked his character. I didn't really care about all the other things, but I knew that there was an end buyer, and I also knew in that scenario I took title with him to protect me, but also I knew that his contract price and there was such a huge spread that his end buyer had to get, so let me step back. So he had an end buyer that was relying on a loan. And the reason why he needed this money because he had to close on it, but it had to be seasoned for 3 days. So I funded the 280 something thousand so he could close. And then the closing had to be seasoned for 3 days. And then his buyer, so I gave the money, I believe, on a Tuesday, and then I got paid back that Friday. Because for a short sale, I had to fund the money on that Tuesday when he called me up, and then money was seasoned, and then the end buyer ended up closing. The end buyer who was getting the loan ended up closing that Friday, and I got paid back. That client was super. He was very, very happy. He wrote me a review. Very nice guy, and I felt comfortable. Also, like I felt really comfortable because he knew exactly what he was doing. Very professional. He put me in contact with his title company that I have a very good relationship with, and everything. Like I felt very protected, and I like his strategy a lot. So that was more transactional. Another guy, he needed actually a true transactional loan where it was a HUD deal. He had a cash buyer, and he had to take title because it was HUD. You can't just assign that contract. So he needed money to close on it. In that scenario, C's money was in escrow. We funded it. I got the money back within 24 hours because we didn't get the cutoff date. What else do we have? And so going back, I know I'm running like almost wow. So going back, what is making us very innovative? It's we could go up to, let's say, fix and flip. We'll go to 100%. We could go to, remember, standard loans. If it's a standard for fix and flip, which um, which are basically a standard to me is we'll go up to 90% of the purchase price. We'll give you 100% construction monies up to, let's say, 70% of the after repair value. We could go up to 75 on case by case. And okay, but that's pretty much like a lot of lenders may go up to 85 only, or a lot of lenders go up to 90, right? But those are standard. What makes us different is that we could provide you gap funding to offer you more money, or sorry. So for example, the gap funding, instead of having to put up, well, a great scenario is you put up zero money, right? But we customize things because it's not like it's more relationship based with us. We like to build a relationship. It's the money's fast once we get to know you. But first, like I want to understand your business plan. I want to understand things and underwrite the deal, understand, and then we'll customize different programs for you. Usually, it's a blend of institutional and our capital, or some other investors. And keep in mind, I'm constantly innovating these programs. That's why I may come back. I'm gonna definitely come back on here and kind of explain more things. Another thing is no interest payments for 6 months, maybe 3 months, 6 months, maybe 9 months. You have no interest payments. That is another innovative program that we offer for the fix and flip. What's another thing? You need more money. You need construction monies up front. We could give you that construction money up front. Not all of it. I mean, it really depends. Look, like everything's a case by case, but let's say you need 25% of the budget upfront at closing to get the project started. We can give that to you. Let's say later on in the project, like, hey, Adam, I need more money because I went over budget. You call me up. I'm not guaranteeing this money to you, but I'll look at it. And I've had it happen where I've given people money because they need to keep the velocity of the project going. If you have another flip, let's say you have another scenario is, let's say you have a flip that you're working on and you need your loan matured, but you need me to refinance you out and pay off that lender. We could do midstream refinances. Let's say another scenario is you you have another loan with another lender, but you need more money for construction, that may be one of our micro loans over here. We do those as well, and I gave examples of multiple people that needed like 50,000. We even made an exception, gave someone 300,000 for a micro loan. Well, it wasn't really a micro loan, but I think you get the gist of what I'm talking about. And then the long-term rentals. Oh yeah, I forgot to mention the long-term rentals. I understand creative finance. So if you want to talk about mortgage methods, come to me. I am the guy to help you structure these deals, these creative finance deals. Eventually, I may even provide microloans on long-term rentals, but I need liquidity for those loans. So that is something that I'm working on. This is different. I gotta tell my web guy he's got to fix that. Okay, I'm gonna tell him to fix that. Um, so that is something else that and we're constantly evolving. But keep in mind that these microloans max 6 months, and we generally like to make high yield, and we don't have a set box. Everything's case by case. Another thing is, obviously we could do new construction. We go up to 90% loan to cost. We can even roll in 5% of that 90. We could roll in interest payments on that into the loan, like 6 months of. So you have 6 months of no payments. We're rolling those payments into the loan. We could do portfolio loans for rental properties. And then the micro loans, again, I gave you multiple scenarios. It could be for gap funding. It could cover your interest payments. It could cover if you need more money for a draw, if you need an earnest money deposit, if you're a wholesaler. We could get very creative with these things. Keep in mind, it's very relationship based, and so we could explore that when you need that. Transactional lending. This is one of my favorites. Double closings. If you're a wholesaler, you want to disguise your wholesale fee. You're a licensed realtor, whatever the case is. You need to take title because it's a short sale. It's a HUD property. I can help you with that. We're reliable. We're also cheaper than the market. I don't want to say we could be flexible. We could always finagle numbers, and we close quick within 24 hours. And we're always evolving with scenarios. So does anybody have questions? Give me 1 second because I need to make sure that I could give me 1 second because someone's got to help me out with YouTube. Give me a second, please. I'm actually calling my wife, Gracie. She's the tech person on this. I'm pretty good with tech, but she's helping me out with this. So let me go back. So, we have the microloans and another.
Hello?
Hey, Gracie, anybody ask you questions in the live? I'm still going.
No, there's no questions. You don't see the chat?
No, because I'm on stream.
All right, to see this, there's no question in the chat.
Oh, I see comments. Oh, that's the chat. Okay. Yeah, so I'm part of Sub 2. So look, being part of Sub 2, I understand creative finance very well, and I respect Pace Morby tremendously. I think I met him, never knew about him until last year, and he's blown me away with just learning so many different things. And then it helped me come up with new products for investors, and I like to cater to a lot of Sub 2 members. Stephanie, do we fund foreclosures? Yeah, we do. Do you have an example of a foreclosure example? Sorry, my mouth. I need some water. So, for example, I got an example for you. We have clients, they go to the auctions, right? They're constantly going to the auctions and they need financing. Problem is they can't get inside the house, right? So we could order a drive-by appraisal. We could close in as little as a week. We have something called fast track funding that we used, and it speeds up due diligence with all our counterparties, speeds up everything. Appraisal comes back in 2 to 3 days, underwriting, everything. So I would say, yeah, we do. Stephanie, we do. That is something that we're really good at. I through my other company, we would fund a lot of those, and we fund actually that one scenario, the transactional loan that we did was an auction property in Essex County. Um, but that was a little bit different because he kind of came to me as a referral from a title company. I would have liked to have done the DSCR loan, but it was already teed up with the DSCR loan as the for the purchase for the buyer. But I gave a transactional loan so he could close on it. Keep in mind, like, actually he's one partnership that I actually gonna reach back out to because he wants me to help him scale up his properties that he picks up at the auction to either flip or wholesale. So we could get creative and we could fund deposits. We could get very creative. Any other questions? Go back to sub two. So I like to cater to a lot of people. I'm a go-giver, love helping people. A lot of people probably they I hope that I continue to add value. So going back, so once I figure out a way to create liquidity for these microloans, then I may offer long-term paper for seconds on a DSCR loan, or it could be a seller finance deal or a hybrid, sub two seller, hybrid deal. I don't, sub two people would understand it. Maybe other people outside the community. Obviously, a lot more people know this, but I know there's also a lot of people they've been involved in real estate, but they may not understand it. But I like to always network and learn. Like if you have a problem, please, I want to see how I can offer a solution. Keep in mind, I may not have that solution today because I'm still building out a whole platform, all the automations. My goal is I'm going to offer you excellent customer service. I want to have speed, and I want to make sure that you're going to keep on coming back and refer people. So another thing, we have like I said, if you need you want to book a call, you come here, book a call with me, go to my calendar. How do you do that? Very simple. You go to levinecapital.com. You can hit this, learn more, or you can go at the top, hit private lending, book a call. Um, that is a very effective way to get a hold of me. You can try calling, emailing, but this will set aside time in my calendar. What I do prefer is if you want to get a loan, it says get a loan over here. This thing is so easy. It takes 5 minutes or less. What does this do? It basically, if we have a promotion going on, right? We get promotion codes. You fill it in here. If you're a referral partner, you want to become a referral partner, you could put we'll pay you, let's say $5. We could customize that. I just paid $500 to a client. She just referred somebody. I did all the work. If you're a broker, you can put your name in here. Keep in mind, we're still investing in technology, so it's not all finished, but we're constantly evolving. I'll get into that on another live. You put your target close date. You can select your product. What's really cool is you set your desired leverage. Tell me, oh, I want 100%. Great. It's a purchase. How's the property source? MLS. What's the purchase price? Make up a number. Rehab. Yes. Then what? And then let's say it's a $50,000 rental. No. Then keep in mind, I just said target closing date. And what else is there? Next. So keep in mind, project summary. This is where you put everything that you want me to know about the deal. You put this in here and say, oh, I need a micro loan. So go back. Let's say you need a micro loan, loan product. She needs to I gotta have my person put that in there. The lady that works with me. So it should say micro loan. So then you say need micro loan, 100,000, whatever. Boom. And then over here, you tell us exactly what you're looking for, right? If you need a proof of funds, try this out, Stephanie. Let me know if you like it. So not here. You can get proof of funds over here, but over here, hit request proof of funds. It's automated. You put it in, and you'll get it back in like a minute or less. I think it's like 45 seconds. And you can use that to go lock up properties at wholesalers, realtors, direct to seller, whatever it is. And it's pretty robust. And I'm going to wrap it up right now. I'm going to wrap it up. So basically, I really thank you everybody for joining. And if you have any other questions, feel free to let me know. I could always go on and talk about more case studies of loans that we talked about where we gave 100% financing, no interest payments for 6 months. We can even do equity deals. I've done that in the past where they needed to buy a house and they wanted to flip it to an iBuyer. So we bought it cash, and there's a whole. So we get very creative. And yeah, this is. I hope you enjoyed everything. And yeah, we're gonna have this every Friday, and I really appreciate everybody for listening. And hopefully, we could do some business together in the near future. Everybody, I hope you have an amazing weekend. Take care, everyone. Bye now.